Hey, good morning, everybody. Welcome to Friday, March 6th, as we end the first week of March. So we've had really a couple rough weeks, right? The last week of February was pretty much all down. This week has been up, down, and everybody is kind of anticipating up today. And I don't think that's really going to be the case. From what I'm seeing, it looks like today is going to be another downward day. I'm sure Dave and I will have some perspective on that as we get ready to close out this first week of March. Folks, listen, I know I sound like a dead horse sometimes, and I beat it so hard, but now's the time that if you don't know how much risk you have in your current portfolio, please give us a call. Run through our financial x-ray, 863-382-0037. It's not that difficult. It doesn't take that much time, but it can really and truly put you in a position of knowing where you are and what you need to be doing, especially if you're in that retirement danger zone. Again, that's 863-382-0037. Dave will be with us here in just a moment.
What about love? What about hand cleaner? What about surgical masks? Can't find them anywhere. 8:40 here, 20 before 9. Time to check in on your money and see what's happening on Wall Street. Well, if you don't have any money, I think Phillip Statler's got a line on some. It's Phillip Statler from Statler Financial Services, our everyday partner here. Phillip, good morning. How are you?
Good morning, Dave. Hey, I just wondered if maybe you'd like some free money because, man, money is almost free right now. We've got the 10-year Treasury earlier this morning actually dropped down to about 7/10 or a little below. It's bounced back up to 0.75% now, but man, we are talking about historic rates right now. And the 30-year, 1.3%.
Did you ever think you would see federal bonds going for less than passbook savings accounts? And when you get down to the 2-year notes and the 5-year notes, you could actually do better with a basic, boring, routine passbook savings account that you and fellow financial advisors have been telling people is kind of a dumb move for an investment now for years.
Exactly. You're right. With interest rates the way they are now, it's just incredible.
Never thought. Like I said, it just absolutely boggles the mind. It's got to make an effect on mortgage rates as well. I haven't seen a mortgage rate tracker this morning, but they were way low when you checked earlier in the week as well. So this is actually backhanded kind of good news for the standpoint of people that are looking to refinance homes at the moment, because the pressure is definitely downward on mortgage rates because of those interest rates.
Absolutely. As a matter of fact, I was at an event speaking last night. And one of the gentlemen there told me, he said, yep, they're looking to refinance a piece of property and they're seeing 2.85% right now.
Wow. We're now even starting down to that full point number from the 3.75 I had. And I was kind of proud of that.
Yeah, exactly. So, I mean, hey, they are falling. Now's the time. If you're looking to refinance it, hey, it might be a good time to start looking.
Absolutely. Setting the table for the morning, and the thing that's driving those interest rates down is a lot of smart money saying, oh, get me out of here, and go into bonds and selling off their equities. Dow was down by 969 points yesterday. NASDAQ is down by 279, and the Standard & Poor's down by 106. Everybody down by in the range of 3 1/3 to 3.5%. It was a major league sell-off, and one would expect, based on the rhythm of the week, for us to go back up this morning. And heaven knows we start out the morning with some monstrously good economic news, don't we?
Yeah, we do. I mean, jobs just blew it out of the water. I mean, they came in at 273,000 new jobs compared to 179 that was expected. And but one of my tip sheets I was looking at said this jobs report is the most irrelevant one we've ever had.
Yeah, that's the problem, because our attention is focused so many other places. On top of that, with a darn near 100,000 beat on the number of jobs created, they revised December and January up, and our official unemployment rate 3.5%. My heavens, that would be enough to make the Dow go up 500 points if nothing else was going on.
Exactly. Well, the problem is that all of that report was prior to the coronavirus, and it doesn't really reflect the current employment situation right now, given the coronavirus.
But I'm looking at it, and Microsoft is telling everybody just stay home and work from home. And what in reality, we haven't heard of a ton of layoffs. There have been some industries that have been hit, but once again, a reminder on this side of the pond, we haven't been hit the way China and Japan and Iran and Italy have been yet. And we haven't seen a ton of layoffs, have we?
No, we have not, absolutely have not seen a ton of anything. So, but I think the anticipation is that it's coming, unfortunately.
Once again, we get really, really cynical and really, really fearful and take what should be incredibly good economic news and flush it down the commode. The other economic news that came out this morning were imports and exports, and this really shouldn't be much of a surprise to anybody because international trade has slowed down, even back as far as January when the first hints of this happened in China. Imports down by 1.6%, exports down by 0.4%, mean our trade deficit down from January 6.7%, which once again in a vacuum would be considered good news.
Exactly. And so, but again, the economics right now don't matter. I mean, they do to you and I, but they don't matter to the markets right now. They're focusing on the coronavirus. And remember, a lot of people forget this. The market that we look at today is anticipation of 3 to 6 months down the road what traders believe will be happening. And so the expectation is that this is going to get worse before it gets better.
And trade, by and large, I've always termed Wall Street as being one of the last pure democracies that exist in the world because money doesn't have a conscience. Money just goes where it can find more money and make more money out of it. So it becomes kind of a pure democracy. However, every once in a while, we get caught up in a fear cycle, and we're really into that. I'm not sure I'm taking this particular Democratic vote as being anything that I should necessarily count on as gospel truth.
Well, that's funny, Dave, because you're sounding like Mr. Wonderful from Shark Tank there for a little bit, But you're right. I mean, this is fear-based. And again, if you compare what's happening with the coronavirus, and I know it's not exactly the same as the flu virus, but even as of now, a lot more people passed away in 2019 from the flu virus than we've seen right now here in the United States from the coronavirus.
Understood. I do a Facebook discussion with somebody earlier this morning talking about this thing, and they were on the, oh my God, we're all going to die side of the fence. And I was saying, please don't worry about it. Wash your hands and be calm. Somewhere between those two is probably reality. But the real risk to the thing is, and the uncertainty to the coronavirus on our side of the pond, is that a uniquity to this particular, let's say, variation on the flu, because it really is kind of a relative, is that it's pretty much asymptomatic for kids. So this might add a little bit of wisdom to the notion of, for something that President Trump has said and has really gotten pilloried for, once school is out and the kids aren't rolling in the mud together in groups at recess, things might actually calm down, because I really get the suspicion anyway that a lot of the transmission is coming from asymptomatic kids, ones that are just getting small, amounts of, symptoms off of the thing, not concerning their parents, and then they're smearing it all over creation. I've got to believe that was one of the worst transmission elements in China, where they're much more packed in population than we are.
Yeah, absolutely. I think that is the issue over in, the Asia in that area, because they are, their living conditions are much different than ours, and so much closer quarters. The sanitary issues aren't as good as they have it here in the United States. So all of that adds to that issue.
Understood. It's definitely something to be concerned about, maybe afraid of, maybe not to the amount of fear that we're expressing on Wall Street right now. A couple of reports that have come out that might give us a little bit of pause to think. How are the companies doing we're actually trading, or at this point in time, the companies we're selling right now?
Yeah, well, yeah, that's exactly kind of what's happening, Dave. We got we got a mixed bag today. Okay, we got Costco. They came in 4 cents ahead of estimates. Revenue also beat forecast. They kind of updated their February same store sales, up 12.1%. Here they're saying Yep, it's because of the coronavirus. People are coming in and really stocking up on consumer staples, and so they're getting they're getting the benefit of that when it comes to their store. But because the market's just tanking altogether today, they're not getting rewarded for that. They're down about 1.5%, which you can see if they had missed where they would be. You'll see that in just a minute with some of the other guys we got coming up here because we do have some misses out there.
So word to the wise: don't look for hand sanitizer at Costco right now.
Probably not. Probably not. So the other ones we have are pretty much the other two I have are they're missed. So we have American Outdoor Brands, which is the parent company of Smith and Wesson,
Mm-hmm.
and they missed significantly by 10 cents a share, and they've lowered their sales and earnings guidance for this next year, and so they are getting hit hard this morning, Dave. They're down over 26%, almost 26.5% right now.
Boy, if I could whistle, I'd be whistling right now.
Yeah, that was a big deal. And then the last one I have for you today is H&R Block, the tax prep firm. They had a quarterly loss of 59 cents a share, which was 4 cents worse than expected. Their revenue did beat the street though when it came to their revenue, but they've seen a higher expenses than what they anticipated for some reason, and so they're down 5% this morning.
Ouch. Yeah, it's they're just kind of picture of the rest of the bloodbath on Wall Street. As mentioned, everything was off by 3+% yesterday. And even in the light of some absolutely amazing economic news this morning, I get the feeling we're talking red ink again this morning, Phillip. How bad is it 45 minutes early?
We are, Dave, and here's the deal. Monday we were up significantly. Tuesday we were down, gave some of that back. Wednesday we were up gangbusters. Thursday we gave it back. Most people thought, well, today I'll wake up and it'll be going up.
That's logic, yeah.
Yeah, it goes up until it doesn't. And today we see a lot of red ink again. So right now we've got the Dow down 728 points. That's 2.8%. We got the S&P 500 down $94, which is 3.1%. And we've got the NASDAQ down 291 points, 3.3%, the biggest loser right now. So it's going to be an ugly day to start out, and who knows how it'll finish, but that's definitely the way we're starting. We've got silver's down this morning about 0.6%. Gold is up 0.3%. And we've got crude oil with some announcements coming out of Russia has really caused the crude oil to start to fall today. It's down almost 5% to $43.66 a barrel.
What's Russia doing? Increasing production or getting sick?
No, they're increasing production,
Okay.
and they're saying that demand is going to be lighter. So there seems to be they haven't come to an agreement with whoever they're trying to come to an agreement with, and that's part of the issue.
In that case, we'll cheer the drop in prices because supply and demand stuff I like seeing pushing it down. It's if somebody gets sick and they assume nobody's going to buy it, I don't want it to go down.
Right, exactly.
Overseas markets are pretty following suit on us. All the Asian markets off by over 2% at the close early this morning. European markets are following us in spades because both Great Britain and Germany both off by more than 3% halfway through their trading day. And as we mentioned earlier, Phillip, record low interest rates as people fly to safety and buy federal bonds. 10-year Treasury notes down in the 0.75% range and probably lower on your ticket. It's going to be kind of a wicked morning on the equities market.
It really is. It's going to be a rough deal. And so folks need to understand that if they are in that 10-year, especially that 10-year time period before they're getting ready to retire, they need to know how much risk they have in their portfolio. They may be feeling it now. Schedule your financial x-ray. Give us a call at 863-382-0037. It's never too early to get started on that kind of stuff. Follow us on Facebook on Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
All righty, back here on Monday morning. The markets may stink today, but they ain't going to close, so we're going to be here on Monday morning. Phillip, thank you so much, and you have a good weekend.
All right, buddy. You have a great weekend, too. I look forward to talking to you on Monday.
Thank you. Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Again, folks, remember, if you are in that retirement danger zone, that 10 years prior to retirement, or if you're on the other end of that, right, you just retired, folks, not just messing up a little bit can mess up your retirement. Don't let that happen. Schedule your no obligation financial x-ray. Give us a call, 863-382-0037. Hope you have a great day, a great weekend. March is well on its way. We'll talk to you soon.